We're going to talk silver and gold. Thank you for joining me in Ron's Basement. You know you are always welcome here. And we were just about even this week. Silver, gold, the mining stocks. When's the last time that happened? But am I alone? Do you ever get that feeling like when the general markets go up, it seems like gold and silver struggle or go down? And then when the general markets go down, gold and silver also go down. It's getting to the point where I'm like, what gives? You know, at some point, the worm will turn. It will get better. But for right now, here in the basement, we're going to talk about what happened last week. Let's review the action in the market. Let's talk about those big stories that impacted the market this week and into the future. And let's talk about one thing in particular coming up next week, the giant Fed meeting, the 3/4 point hike that we're supposed to get. Let's talk about how that can impact the price of silver and gold as we move through next week and through the end of the year. Let's do all of that. Let's do it together because you're with me here in the basement. Let's do it right now. Hey everybody, it's Ron from Ron's Basement, live on the log flume with Lily. Lily, say hi. I'm glad you decided to join me here in the basement. If you get some value from my content, and I do hope that you do, please subscribe to the channel right here. That would really help. Now let's talk about some specific numbers quickly, and then we'll dive into some deeper analysis. But for the week, gold was basically even, $1,650 per ounce. The GDXJ, the Junior Gold Mining Index, that's a good bellwether for the whole mining sector. It started the week at $29.85 and ended the week at $29.95, up a full 10 cents. I think that's like 1/3%. Nothing really major there, but it's important to remember, like with the GDXJ, it's below $30 per share. Just back in April, it was over 52. Yes, 6 or so short months ago, it was almost, 75% higher than it is right now. So when the market turns for the metals, for the mining stocks, we have a big runway ahead of us, a lot of room to catch up to the point where things are fairly valued. Now, let's move on to silver. It was basically even for the week as well, started around 19, ended a little bit above 19. Maybe it was up 1%, but you know, for silver, we like when it goes up 10 and 20 and 30%, and those days are coming. The silver mining ETF, SIL, started the week at $24.90, ended the week at $25.14. It was up about 1% as well. The 10-year bond yield actually dropped from 4.21% all the way down to 4%, 4.01% to be exact, when you want to quote that later tonight at a cocktail party. Rates are still very high. They have risen at like one of the fastest paces in history. That's making credit card rates go higher, and we know that not us, but there's a lot of people out there with high credit card balances. It's making their monthly payments go higher. Mortgage rates, for like the first time in I don't know how many years, over 7% for a 30-year mortgage. The housing market is cratering. We're going to touch on that a little later as well. The dollar is still at historic highs at about 111. It had started the week around 112, so it was down about 1%, but still, from a historic perspective, the dollar is very, very high. And that's when you compare it to some other really crappy currencies, right? The euro and the yen. The dollar is like the healthiest person in the intensive care unit, but they all have death sentences. So we're not going to focus too much on the US dollar. I mean, the dollar, sure, it may be strong, but how strong is it when you go to the gas station? How strong is it when you go to the grocery store? How strong is it when you try to use it to buy a new piece of real estate? I rest my case. Bitcoin actually had a pretty good week. Started out at 19,200, and good old Bitcoin ended at 20,600, up 6 or 7%. I hope Michael Saylor and Max Kaiser are happy. Good old Bitcoin, but it's got a long way to go to get back to its $67,000 high that it reached less than 1 year ago. Let's do a little analysis of gold. What do you say? It still stinks. $16.50 per ounce. If you told us that 6 months ago or a year ago, we would not have believed you. It has just been fighting against the strong dollar, fighting against high rates, fighting against the high rate on the 10-year bond. Everything that could be working against gold is working against it right now. Nonetheless, the Eastern countries are importing tons and tons of gold. They're obviously moving toward their own reserve currency that might be backed by gold. I mean, gold makes sense to back that currency, right? I mean, that's the one thing they all have in common and the one thing they all really love and their people really love. So I would not be surprised to see this new BRICS currency backed by gold. But gold's hanging in there in US dollars. You know, it's fighting a good fight, but if the Fed indeed does start to become a little more dovish, a little less aggressive with their monetary policy, the price of gold, it's going to take off, and we're going to be real happy. And mining stocks are dirt cheap right now. Many of them at their lows that they hit back in March of 2020 or lower. Unbelievable value in the precious metal mining sector by almost any metric. Look, I have a degree in accounting. I worked for one of the big four accounting firms. I may joke around here from my basement, but I know what I'm looking at when I look at financial statements for companies and how they stack up against the rest of the market. The mining sector right now on almost every metric is the best value going. Now, price is what it is, and you can't argue with that. They could even get cheaper, but man, you know, price is what you pay, Warren Buffett said, and value is what you get, and you get a whole lot for every dollar that you put into a precious metal mining company stock right now. Let's touch on the U.S. economy. And Joe Biden continues with this economic miracle that he is pulling off. He is just so on top of things. GDP grew in the third quarter apparently by almost 3%. That just worked out perfectly in terms of timing right before the midterm elections. Everything is awesome. Yeah, well, we did get news just today that month over month, pending home sales dropped by 10% in 1 month. The expectation was for 2 or 3%. There's all kinds of unbelievably bad data points in the real estate sector. Bank of America is predicting that in the first quarter of 2023, we'll be having about 175,000 layoffs per month. What else? Record lines at food banks, record levels of credit card debt. Savings, American savings are being depleted. Good job to our leaders in Washington who may like to say that the economy is doing well, but I think the reality is on the ground that the economy is not doing too well. Americans are suffering, as are people all over the world. Next, let's talk about the big news coming up this week. November 2nd, the Federal Reserve will be meeting, and they're going to raise interest rates by 3/4 of a point. At least that's what everybody and their brother thinks. What the heck? I'll just say I think they're only going to do 0.5%. But most realistically, statistically, they're going to do 3/4%. Now, the interesting thing we're going to be looking for is how they communicate afterwards, how they communicate in their meeting notes, because there have been a number of leaks and a number of thoughts that they're going to be doing a mini taper, or I heard somebody else refer to it as quantitative tinkering, that they're going to tinker with the quantitative tightening, basically become a little less aggressive, or at least start to talk about becoming a little less aggressive. Now, I'd like to be able to tell you that on a first-hand basis. I have invited Jerome Powell to the basement several times. I've even offered to displace my beloved wildlife bear, the gold bear back there. And Jerome, he said this week he's got the big meeting, so maybe the week after that we will have Jerome Powell down here in the basement. But that's the big news coming up this week. That will move the gold and silver market. Could move things significantly. If they kind of reiterate more hawkish, if people feel like they don't start to tilt to the dovish side as much as they're thinking they will, it could be bad news or could put a little pressure on gold and silver, but I don't know how much lower they can go. I mean, they can always go a lot lower, as we know, but I think that, there's been so much downward pressure that even a, let's say, hawkish surprise from the Fed couldn't push the price down too much lower. And let's wrap up by talking about what's going on in the big world, big things geopolitically. We still have OPEC that is like totally slapped Joe Biden and the United States in the face with their 2 million barrel per day cut. It really feels like they're moving to become much more friendly, let's say, with China and Russia and the other Eastern BRICS-oriented countries. And another interesting piece of world news that relates directly to gold and silver that we got this week is that Egypt is making plans to at least partially back their currency, which is called the pound. Don't say you didn't learn anything in this video. If you didn't know that, now you know. The pound is the official currency of Egypt, and it will be at least partially backed by gold as they make a move away from the U.S. dollar. It sounds a lot like they're a BRICS country because that's what the BRICS are talking about doing as well. Hey, it's going to be interesting in the coming weeks, quarters, and years. I will be here for you through it all. Don't forget, please leave a comment in the comment section below. If you want to be notified every time I put out a video, and I mean, oh my gosh, why wouldn't you want to be notified like immediately when this guy in St. Louis puts out a insightful video regarding world economic issues and, of course, gold and silver? If you want that, turn the little bell, press the bell wherever it is. That way you'll get notified. Most important, thank you for joining me, okay? I'll be looking forward to seeing you next time. Be well. What's Tim doing? Oh, he's eating.
Yeah.